Hi folks, I'm Doug Hensley, President of Hertz Real Estate Services, and I'm coming to you today with our November farmland market update. Last month I reported to you that harvest was just getting a good start and that I'd seen several guys cutting beans beginning the last week of September. And here we are today at the beginning of November with harvest nearly complete across the Midwest. I personally cannot ever recall a more open harvest season with day after day of near perfect weather. In early October, you'll remember the state of Florida absorbed a pretty strong blow from Hurricane Ian, which laid waste to a big part of the Fort Myers area, unfortunately. And it seems like whenever we see one of the Gulf Coast hurricanes make landfall, those big low pressure systems just back up weather in the Midwest, and that's exactly what happened in the first half of October across our region. It was almost like Groundhog Day with blue skies, sunshine, and around 70 or 75 degrees every day, which was near ideal conditions for soybean harvest. Once guys finished soybeans, they seemed to plow without hesitation right into a standing corn crop that had dried down really nicely in the field. My eyes tell me there has not been nearly as much liquid propane used this fall to dry the corn crop as is typical, and that's a big positive just from a cost perspective. Yield-wise, as we suspected going into harvest, there are some regional differences from area to area, especially in the western corn belt, which gets us out to eastern Nebraska and western Iowa, where drought conditions really took its toll for a big part of the summer. I've talked to several of our people out across this region, and soybean yields have ranged anywhere from 20 to 45, maybe 50 bushels on the high end, while corn yields have generally ranged from 100 to 220 bushels on the high end, and most of that 200 plus yield category in the western corn belt is on irrigated farms, which is actually a bit of a disappointment. As we head both east and north, yields pretty dramatically improved. Here in central Iowa, we also weren't long on rain this summer, but the timing of the rain that we did receive was pretty solid, and as a result, we've seen a lot of 60 to 80 bushel soybeans, and it's pretty common to hear and see 200 to 240 bushel corn. It's not the best ever by any stretch, but it's pretty solid. The story in southern Minnesota is really similar, with mostly strong yields across much of the southern one-third of Minnesota. As we get into eastern Iowa and cross the river into Illinois, we've seen even bigger numbers largely, along with a few isolated pockets of drought-impacted areas. Southeast Iowa had a little bit of a drought situation this summer as well. There were a couple of pockets in both western Illinois near Macomb, as well as eastern Illinois near Champaign that weren't up to par to their normal yield situation. But overall, more smiles than frowns across much of central Iowa going east. And even in the disappointing areas, I think it's not been a horrible situation, especially given that we have still strong grain prices with $7 corn and $14 soybeans. Where yields were big, farmers are really going to ring a bell and be very profitable. And in those disappointing areas, I still think there's going to be profit margin to be had coming out of this 22 crop. As we look ahead to the next year in 23, I've mentioned before that input prices are measurably higher, and break-evens for the 23 corn crop will probably be $5 a bushel or more just to break even next year. Likewise, interest rates have continued to move higher in the past 30 days. That's been well documented in the media, and most mortgage rates for farm purchases are now between 7 and 8%. This is about as high as we've seen rates for at least a decade, if not longer. And if you're borrowing money, the math is going to change from what we've enjoyed the past couple of years at least. But given strong profitability here in 22, I don't expect there to be a huge expansion of borrowed money. There's still a lot of cash out there, and there will be this fall. But you should know the rate environment is going to begin to factor in and change people's appetite in some ways. As far as the land market goes, we continue to see a market that is well supported, especially for the better quality farms. We have this push-pull situation that seems like where good profits and strong grain prices are pushing things higher on one end, but input prices and higher interest rates are pulling back on the other end. And when we add those two things together, I think the push-pull is mostly balancing out in the land market with things kind of chopping sideways. It's still possible to see a record sale, but those seem to be slowing, and certainly not every sale will be a new record like we experienced a year ago in the Goldilocks market, as I've called it, of 2021, when everything was just right. Here in early November, we are continuing to see a good volume of farms brought to the market, and that will continue through year end. We have upwards of 60 farms coming to auction across our region between now and the end of December. As far as cash rents, I wanted to comment on this real quickly for the coming year. With stronger profitability being a reality this year, I do think we're going to see cash rents reset anywhere from 5 to 15% higher. And where in that range is reasonable will depend on where you're starting from. I've thrown a lot at you here in today's update. So if you have a question about any of this, how your farm or your family situation may fit into the local market, please reach out to us at hertz.ag. As always, we're thankful that you took the time to watch, and we'll see you again real soon.